Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, September 15th, 2016. In this video, let's talk about gold, GDX, the mining stocks, and I'll cover we have a couple official trade ideas on, and so as such, this will be a members-only video. Um, Start out with the charts of gold. Here's what I'm seeing today. Other than the crazy shenanigans in the broad market, which I highly suspect is just a shakeout move. Longer term charts remain bearish. Let's look at what's going on in gold. Being that the market is up strong today, we'll call it the Apple rally. Apple pulled the Qs up. The Qs have finally started pulling up the SPY and the IWM and all that. And again, we'll see if that sticks. I don't suspect so. But more importantly, that gave us, or gives us, I should say, a risk-on trade today. Lately, the trade has been risk-off since last Friday. Clearly, a risk-off trade. And today we see risk-on assets rallying, and that includes the miners. So we see this unusual disparity. Not so unusual, really. The miners tend to rally a lot. They do follow gold over the long and intermediate term. From day to day, they're more of a risk-on, risk-off trade. As I'm doing this video, it is 10 after 3 p.m. Eastern Time. The miners are up, GDX that is, 1.35%. Gold is down 0.57. Gold has been down all day, has not gone positive yet today. I don't see it going positive. We're starting out here. We'll look at the daily chart of gold. The case has already been made. You know, we had this divergent top back here, which led to this very sharp correction. It was the biggest correction in gold at the time for the year. And the divergences, we've only seen those build and grow. In other words, this is a bigger divergence, but it's off that same original high. So, you know, you can use, there's not a hard set rule that I've found, but typically it's safe to say that the larger the divergences and the steeper the wedge or price move up, the bigger the fall once those divergences play out. So my point being, we had this uptrend line we were watching here. Gold broke below. That's the breakdown. And this move from the breakdown so far, this is not commensurate with the divergence that has been put in place with gold. And you can see these divergences down here on the using the PPO and the RSI down here. So again, I maintain my bearish near-term and intermediate-term bearish outlook for gold. Longer term, charts still look fine at this point. You know, whether this proves to be just a big, you know, cyclical bear market within a new secular bear market, that's all, or I should say, I'm sorry, if this proves to be a cyclical bull market within a larger secular bear market in gold, that we'll try to determine that if and when that time comes. But right now, I'm not looking for that. I'm looking for a pullback in gold, buying up for the mining stocks. But as I've stated, I think at best we're looking at a dead money sideways choppy trading range in the mining stocks, and at worst, you know, if you're bullish, that is a pretty significant correction. In other words, a lot more downside from here. This is that first support target I've talked about for a while, roughly 125.15. You can see we've hit it, we've danced on it. It's pretty well defined. If and when that goes, we don't have this isn't I wouldn't call a solid support level. But that's roughly where I see the next support coming in on the daily chart. Now let's look at the 60-minute chart real quick. And I'm starting out with gold. Again, we don't have gold as an official trade idea. I'm not long or short gold. You know, I typically prefer trading the mining stocks, because if you get the call on gold right, the mining stocks are simply a leveraged play on gold, meaning you'll do 2, 3, 4, 5 times what the returns on gold will do in the same direction if you get the trend correct on either on gold and you trade the miners as your proxy. So here's that level. Here's the big support level. You can see it very clearly on this 60-minute chart. Forget about these other lines for right now. Over here, you see the volume at price histogram bars, these green and red bars, and you notice how thin it is just below that. Thin meaning you see this abrupt drop off in a thin zone. So what this is, this whole area is a very important support shelf right here, this orange line. You can see how well It capped the advance leading up to that. That's a reaction. That's a resistance. And then once we gapped up, we had an impulsive gap, which further validates that trend line because we gapped above it. And then as you can see, we came back in, tested, went up, back tested, went up, tested it again. So we have numerous tests of that support level. You can see that in each bounce off that level, we've made a lower high so far, a series of lower highs, which speaks to the bearish case in gold. Let's try to highlight those. You can see the series of lower highs going on so far. And that's it. I don't see anything in the 60-minute charts. We don't have, as most of you know, in a major trend, I like to see bullish divergence. We do not have that in place. We would have to make a low here. We'd have to take out this previous low in gold to even be able to put in a divergent low. There's some potential divergence there. Again, potential. But if you look at really where this MACD is on gold, if we go below there, the MACD is probably going to take out that previous reaction low. So I don't see a very strong chance. There's a slight possibility because right now, again, we have a lower high on all these indicators down below, but not by a whole lot. So what I'm trying to get at here, if we slice through by more than just the slightest margin, and that's possible. You can take a look here and see this thin zone starts to get thick right here. So maybe we go down there. Anyway, something to watch for. But my point today being that all day, despite a risk-on rally in the broad markets, which again I'm dismissing at this point as a one-off aberration because the SPY has not yet confirmed the small caps, mid caps. I really think this has been almost exclusively induced by Apple. Sure, it takes the rest of the components, and yes, they're catching a bid today. A lot of those actually below average volume too. I'll point out. So I think it's the shorts being squeezed out. We'll see. I already told you in the video today on the market update. I believe I mentioned I'll going to give my own positions a little room here. See what we do tomorrow, next week, and into the Fed meeting, assuming we don't push up too much higher than where we're at. But there's gold. Here's today's price action. This is yesterday's close. This dotted line. So you can see gold's been down, tried to rally to break even, failed to do it, and has turned back lower. Yet GDX is just, chugging along today with a risk-on trade. Looks like there's some support here intraday. You can see the reactions there. So if that goes, that'll bring the next leg down. So I already made the bearish case for gold. And again, I always say, if you want to know where the miners are going, you just have to really get a good feel for where gold is going. This is the daily chart again, or I'm sorry, this is the first daily chart. We didn't look at this yet on GDX. And here's the PPO, does a better job, works very similar to its cousin, the MACD, that look on this chart probably almost the same. But when you have these large price moves, you see a move from $13 to $32 in just 7-8 months, 9 months. That actually, now back to that point, it was August, 8 months from the January lows. You're better off using the PPO on those sharp, or I shouldn't say not so much a sharp price move, but just a large variation in prices. This is a log scale. If you go to arithmetic scale, it's completely different, throws your trend lines off. So there it is. And looking at that, I don't see a whole lot. This PPO looks like death here. It's crossed over. It's below the zero line, which puts it in bearish territory. I often talk about that. I use this 9 EMA right here. The signal line, the white line, and when that is below zero, as it was here, the trend is bearish. When it's above zero, as it was here, not hitting these exactly, but you get the point. The trend is bullish, and so we've clearly had a, from this point to this point, it told you the primary trend in gold was bullish. Stay long. And that's what the that trend indicator was showing you. Now it is clearly, this isn't a close test. That zero level often acts as support or resistance when tested from above or below, as it did here. Bang, 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 finally broke above. This was a brief whipsaw. Again, nothing's perfect. Here's a point where it came up and tested, but it rolled back over. So there's a point where, like I said, it's where it was tested from below. But now we have a clear breakdown and move. And more importantly, I like to see, for the bearish case, this rejected bullish cross right here. You see how the blue line, the PPO line, was coming up, look poised to make a bullish cross, and then boom, rejection. They both turned down lower. We also saw rejection on the RSI at the 50 level. The 50 level, this dotted line in the middle, as you can see, often acts as support when tested from above and resistance when tested from below. And we came up, tested it from below, and rolled down. So I don't see anything in this daily chart even remotely close that tells me this the correction in the miners is over. 60-minute chart, let's take a look at that. I pointed out there's some potential. Well, we had divergence back here. Here's the 60-minute chart. That was pointed out in the trading room. It was pointed out in SIL and GDX, and it played out. And it played out for a decent bounce, but nothing more than a counter trend bounce out of this larger, you see the larger bearish rising wedge pattern. You can draw it out here. We had this breakdown. I didn't have it drawn. This is a different time frame, but there you go. We can see it here on the 60-minute chart. It just carried a little to the left of the chart. That's why I can't show the whole thing on this time frame. So there was our counter trend bounce. We rolled back down. This was wave 1 down, really, in this correction. Here's a wave 2 up. This wave hasn't even taken out the previous low yet, and I don't see anything indicating it won't. We don't have divergence. Now, I want to point out there is a potential for larger divergence. The potential. If you look and draw these lines, extend these lines out, should GDX go on to make a marginal new low, just punch down below here, not without these indicators making a new low, without them taking out these previous lows back here, that would put in some potential positive divergence on the 60-minute charts, which could lead to a nice bounce. The GDX / Nugget short trade, again, Nugget's my preferred proxy because I think at best we're looking at a big sideways grind here as we maybe grind lower and then grind sideways for a while. But you can see on the 4-hour chart here that we're very close. We came very close to the first target already. I still think it'll be hit, and if it's taken out, we came so close to it before that may be almost an effective hit. Now watch if we get there, and we also have that 38.2 fib just below there. That's happens to line up nice with the horizontal support, that dotted line. If we get there and there's 60-minute divergence on the charts and it's confirmed, we might be looking at a pretty good bounce. And I don't believe that will be the end of the pullback in the miners, although I am open to the possibility of it. So let's just watch that, see if it forms. The miners could slice right on through there and burn through those divergences and head on down to the second target level. But as of now, I'm keeping T2 at 22.28. You have support at 22.11, just below that, the horizontal line. I set my target just below that to help avoid missing a fill. And it's hard to see because they're overlapping, but the 50% fib is right on that level. By the way, that support level is based off these reactions here. You can see back there. So that's my take right now. Again, everything doesn't, I don't see a lot of bullish developments here. I do see that potential, again, just potential for bullish divergence here, and that would show through on the 4-hour chart. Again, prices make this thrust down and then turn around from that point. That would be an ideal long entry, I think, guys. If that was confirmed at the time, another push down here and then a reversal, push down, a reversal, bullish divergence confirmed. That might be a good area to cover all the shorts and reverse to a long position. So we'll just have to cross that road as we come to it, if the charts develop like that. Okay, so that's the picture on gold and GDX, and then we have a couple individual miners I'll touch on real quickly. HL, Hecla Mining, this is one of my favorite silver stocks. Beautiful pattern. I mean, look at that. This is how steep that rising wedge was, confirmed with bearish divergence, negative divergence, breakdown, impulsive first thrust down. I mean, this one's just played out perfectly. You came down, hit the first target here. The first target was 569. My actual support level is a little below that, around 559. Found support on it for a while, numerous reactions right around that level. And remember that former support, once broken, becomes resistance. So this T1 level acted as resistance on the bounce back, that initial snapback rally. We came back down, and what have we done since then? We took out those lows, and now we're back testing the former first target level. I know these candles came a little bit through there. That's normal. The miners are extremely volatile, and there's a lot of momentum. There was a big drop here, and you just have that day-to-day volatility, so it's not uncommon to see little slight overshoots of the support and resistance levels when trading the miners, more so than some other stocks. But right now we're clearly we broke below there and are back testing that level now. This is resistance, this whole area here, and unless taken out, my expectation, I don't see anything in the charts. I look at the PPO down here, a rejection there on an attempted bullish crossover. I mean, by all accounts, that looked clean, and we even started to make the cross and fell down. That's pretty bearish price action. So again, I think the miners are just getting a sympathy bid. The robots, the high frequency traders, the machines, the algos are just buying anything they can get their hands on, risk on stuff today, and we'll see if that rally sticks going into the next week. And even if it does, guys, even if the equity markets keep going up and gold, the charts play out as expected, the miners aren't going anywhere with gold moving down. They'll tolerate a disconnect for a day or two, a few days at a time. But again, ultimately, where the miners head depends on where the metals go. So HL, like I said, back testing looks good for more downside, especially if gold breaks that support level I talked about. CDE is another one. Really like this one as well. Just a beautiful, very steep. When I say beautiful, because it's well defined, that trend line has numerous reactions. It's steep. The steeper the wedge, the harder they fall when they break. And this one has played out perfectly. This is a support level I've had there throughout the trade. You can see the reactions. We came down, tagged it almost perfectly on this one. No overshoots there. Tag of support, the initial bounce, initial reaction after the first wave down, and we've moved lower. We've taken out that low, and look at that doji. We're just back testing. We came below there today. Broad markets are rallying so hard. Everybody figured buy whatever you can get your hands on, especially the risky stuff. So they're buying the miners, not paying attention to what gold's doing. And so they, a little stick save so far. But a stick save is really just to take CDE back to back test this recently broken support level today, which is now resistance. So we're there. If we get back above here, then you can say, okay, tested resistance and tested support, and the support held. It held at least on a daily basis, a daily close. Intraday, it took it out. But that looks good to me. Again, the PPO looks like death, just recently crossing over here. Tried to make, we had two things that happened recently. The line, the 9 EMA, the signal line, was right at testing the zero level. So CDE certainly had the chance to bounce off and hold above there, but that didn't happen. You can see that the signal line is clearly below. And we also had, at the same time, what looked to be a bullish crossover on the PPO with the this blue line, the PPO line crossing above the 9 EMA rejected. So that's pretty bearish price action. And again, how these trade in the next day or two here, next couple trading sessions should tell us a lot. All right, and I think we have one more. No, correction, that's it. I thought I've thrown out a lot of trade ideas in the video I put out a few weeks ago, and I maybe mentioned some others in the trading room. But if unless I'm mistaken, HL, CDE, and GDX/Nugget are the only official short mining stocks on the site. So with a couple minutes to spare, we'll just look at silver. There's silver. This is a silver miners ETF. I told you I was more bearish on the silver miners and still am than the gold miners. And this looks, beautiful breakdown, very clear. Rising wedge, divergent high, that steep divergence right there at the final high. We broke down, flirting around that first target area, and this just looks like a consolidation, more like a continuation pattern. And if and when those lows get taken out, we'll probably run down here, hit this second target, find some support, and then ultimately, before all is said and done, I do think it's very likely that SIL and the silver stocks end up down here around that $32, maybe $33 area, again, before all is said and done. All right, this has been Randy Finney with Right Side of the Chart, and I hope you enjoyed it.